are going to dive in here and we're going to talk about crypto in 2024, which is a topic we haven't visited for a while, but is sort of on a remarkable run. And for those of you that think a lot about smart giving and helping your donors do asset-based giving, this tends to be really important. So a couple quick housekeeping notes. Approved for 1.0 CFRE credits. At the end of the session, we will drop a survey in the chat, and that will certify your participation. So that's good news. Here's the agenda. I won't read it out. Big thing is slides and recording will be available later today. So you can take notes, you can lean back, you can drink coffee, you can drink tea, you can drink adult beverages if that's what you're doing at noon in the afternoon on a Tuesday, whatever makes you happy. But we'll send you the slides and the recording after the fact, so you don't have to take notes if you don't want to. Quick intros. My name is Patrick. Lucky to be the co-founder and co-CEO alongside with Jenny, pictured here, of FreeWill. And we are very lucky and happy and delighted to be joined by almost 200 employees, raising almost $10 billion to date. Now more than 1,500 nonprofit partners, including many of you. So I saw some familiar names in the chat. Big thank you to you all. We love working together. And together we have over 4 centuries of combined fundraising experience. We have a lot of folks who are experts in various levels of fundraising, including many in crypto. And so whole team effort to put things like this together and obviously put the whole company together. So we have a couple of FreeWill staff on the call. Big shout out to you all. And thank you for everything you're doing. In the spirit of thank yous, we are really grateful that you're here learning about different types of fundraising, you're advancing your career, and also making it more likely that your organization is going to hit its goals this quarter and this year. And so as a thank you for that, we are going to give away one of my very favorite books called The Psychology of Money by Morgan Housel to 20 people. We've given away this before. The people that have read this said, holy cow, this changed my life, which is a really good review. And it's a really interesting note on how folks, including yourself, think about money and how that relates to different decisions. Stephen, who's read it, says, great book. And it's a great way to think about your own finances, your own career, as well as obviously fundraising, which is a topic and a career all about money. A couple other things before we get started. We got a sense of how your week is going. Things are looking up, which is great. One of the better sort of mood weeks of the year, and certainly going back to January 20, I think this is 2021 that we're measuring back to. Also how we're comfortable about hitting our goals this year. A little bit up from last week, so good signs of things to come. All right, so let's talk about crypto and where folks are right now. Then we'll talk about where we're going and what to do about it. So on a scale of 1 to 5, we asked you how confident you are in your crypto fundraising knowledge. And almost half of you said I'm a 1. Basically, no one said I'm a 5. Now, this averaged 1.83. It was actually down from the last time we surveyed everybody in September of 2022. So you actually see this sort of drifting backwards, a little bit of backsliding. It makes sense. September 2022 and sort of late 2021, early 2022 is when crypto was back at previous highs. We asked you whether you accept crypto gifts. About 26% of you do, which means about 75% don't. A lot of folks, 32%, say we plan to accept it in the future. So there's a lot of folks who are in exploration mode, and hopefully this will be quite helpful to you as well. So let's talk a little bit about crypto, then we'll talk a little bit about crypto fundraising, but we'll start here. What is crypto or cryptocurrency, right? We'll call it crypto for short. Cryptocurrency tends to be a very long word. Is a digital currency. There are more than 23,000 of these in the world. Many of them are worthless, but not all of them. In 2022, there were 16,000. In 2014, there were 7, right? So you see this explosive growth. Many of these don't matter. We're going to focus a lot on the 2 most popular currencies today. The first one is called Bitcoin. It is the most famous. The second one is called Ethereum. It is the second most famous, second largest. And importantly, it is the most commonly donated coin in the United States. Ethereum is more commonly donated than Bitcoin. So that's important. Bitcoin has a $1.2 trillion market cap. I'll tell you what that means in a second. And Ethereum is about a third of the size with a $422 billion market cap. 99 currencies have market caps of $1 billion or more. That is out of the 23,000, right? The global crypto market cap is 2.67 trillion. I mean, we got all the crypto in the world. How much money would we have? We would have about 2.7 trillion. And what is a market cap? A market cap shows basically how much they're all worth together. So just to go back for a second, let's go back here. So we got 1.2 trillion, 422 billion in market cap from Bitcoin and Ethereum, about 1.6 total. And that's about 2/3 of the entire crypto market. That's why we're going to talk about these two in particular. Does that make sense to everybody? I hope so. So how are we thinking about crypto, right? Without going too much into the science of it, think of it like gold. People can mine it. They mine it digitally, whereas obviously they mine gold out of the ground. You can buy it. You can sell it. You can trade it as an asset. Why is it valuable? It has value because we say it has value, and we as a society collectively agree it has value, right? So gold is not a super useful property, and yet we as a civilization have decided that gold has value the same way that diamonds have value. Diamonds have some industrial uses, but for the most part, decoratively, they don't do much, and yet we have decided that they're worth a lot. Baseball cards on this sort of opening day don't have intrinsic value, but we have decided that they have value on it as well, right? And there's a limited amount of it, like there is a limited amount of gold in the world, and so the value fluctuates based on supply and demand. Now, why are we talking about this? Well, we talked about it a ton in 2021 and 2018, when previously Bitcoin went up through the roof. And as of March, Bitcoin is worth more on a dollar value than it ever has been in the history of the world, right? So it started out in about 2010, it was about 10 cents. Had you bought a lot of Bitcoin in 2010, you would be very, very wealthy right now, because it's gone from about 9 cents to about $74,000 each, right? So we all wish we had bought a couple hundred Bitcoin back in the day, if not a couple thousand, and you would be a billionaire at this point. But you're probably not. That's why you're on this call, and nor am I. And you can see how we've gone up over time. So what is Ethereum? We'll talk about Ethereum first. It is the second biggest currency behind Bitcoin. It is a network, right? And Ether is its currency. It's commonly referred to as ETH. That's how you would say that, ETH, or just Ethereum, ETH or Ethereum. And just like Bitcoin, you can use it to send or receive or save money, but also there's some special tasks on the Ethereum network. And if you don't understand all of this, it's okay, don't stress about it. But when people use ETH to run smart contracts, which are like automatic agreements on Ethereum, they're using it like fuel to make things go. That's why these fees are known as gas fees. And if people call Bitcoin digital gold, you can think of ETH as digital oil, because it keeps the Ethereum network running. If you have no idea what I'm talking about, don't stress about it. But we want a couple of key takeaways here. It's the second largest crypto coin behind Bitcoin. It's one of the most popular cryptocurrencies. And the thing that's really great about Ethereum, actually, is that in 2022, it sort of changed the way all the mechanics work. Again, we're not going to go into too much about exactly what happened here, but it eliminated energy consumption by about 99% overnight, right? So Ethereum is actually virtually carbon neutral at a time when there's a lot of talk about cryptocurrency using a lot of electricity. So it's the second most popular crypto. Most organizations who solicit crypto gifts accept Ethereum. It's the most commonly donated crypto asset. So it's doing really well right now because it has some very large gifts. So Ethereum was super up in 2021, and then it crashed, and now we're back up. Not quite at all-time highs. Bitcoin, all-time high. Ethereum, close to it, but generally doing pretty well. And so the folks that have a lot of Ethereum are doing pretty well across the board. Now, these all live on the blockchain, right? What is a blockchain? Again, if you don't understand this, don't stress about it, but I'll give you a quick overview anyway. Unlike your bank, which stores everything centrally, it's all in one vault. The blockchain is what we call decentralized, and it's fully public. So everyone has a copy and can participate. Each block represents a series of transactions, and when combined, they show a chain of transactions, right? I pay you, you pay Sarah, Sarah pays John, and that is a chain of transactions along the way. Everyone knows everything. Nothing is left out for most crypto. And the accounts are public, but the owners aren't public, right? So when we say everyone knows everything, it means you have my account number, we have Sarah's account number, we have John's account number, But we don't always know that John owns that account or Sarah owns that account or I own my account, right? So just to give you a sense of this. So that's crypto. The biggest thing to know about crypto is that it's worth something, and it's worth more than it was 6 months ago. So you can think about it in the same way of a stock. But let's talk about who owns crypto. So this is really important, because if you don't own crypto, you don't feel like it's a mainstream thing yet. One of the most important things to understand about crypto ownership is that a lot of people own it. 40% of Americans own some cryptocurrency. 40%, which is wild, right? It's amazing how quickly this grew. Of that 40% who own it, 63% say they want to buy more in 2024. The majority of crypto owners are male, but women are becoming more prevalent in the crypto space. And 29% of cryptocurrency is owned by women, which is a big jump from only 18% in 2023. So you can see that there's a real big trend happening of women owning crypto. It is largely dominated by number of owners. That's important. It's different from amount. Number of owners by Gen Z and millennials. 94% of buyers are between 18 and 40. Interestingly, Gen X buyers actually invest more per buyer in crypto, in part because Gen X has more money than younger donors and younger owners. Gen Xers purchased an average of 10,000 in crypto in 2023. By the way, this is the couple people asking about the 40% stat. It's from a study from security.org, and you can click through it when we send you the slides around. So that's that. Gen Xers purchased an average of nearly 10,000 in crypto. Millennials purchased less, and Gen Zers purchased even less. So great questions there. You can see here what's the average amount purchased. This is of folks who bought crypto, right? So we know that boomers also bought some, but the percentage of boomers who were buying any, not that high, and even those that did buy bought less. So Gen X tends to be, of the crypto owners, the biggest purchasers. Millennials and Gen Z tend to be the largest number of purchasers. Great questions. What else do we know? We know that over $2 billion has already been donated to crypto to charity. When we see crypto donations, the average size is $3,200. So it's pretty sizable, especially compared to online cash donations, which are only $100. Big question here. 45% of crypto users donate at least $1,000 to charity per year. This is from a study at Fidelity Charitable, right? So really interesting to see crypto donors tend to be a little bit more generous. Now, why are these folks giving? There are two main reasons, right? Not dissimilar from many other donors. Those of you that were at the Gen X webinar last week, this will feel familiar. Number one, altruism. I want to make good in the world. Two, I want to save on taxes, right? Those are the two big reasons that crypto owners are giving. And a major defining psychographic. Psychographic is sort of a way that a group behaves. These donors, much less than your other donors, want an active relationship with the nonprofit uncommonly, right? They often won't reply to calls or emails. You will just get the funds. And then they don't really need a relationship. It's very interesting. On tax minimization, right? Crypto as a virtual currency is treated like property. So general principles applicable to property apply to transactions using virtual currency. When you sell virtual currency, you must recognize any capital gain or loss, subject to any limitations on the deductibility of capital losses. That's what the IRS says. Crypto owners are likely responsible for capital gains in the same way that stock owners or collectibles owners are as well. So let's come back to Bitcoin, right? Right now, 64,000. It's actually gone up since we screen capped this. I think it might be back at 70,000. It's very volatile. Again, ETH down, back up. What does that mean? It means that a crypto donor avoids capital gain taxes. So if you bought Bitcoin at 10,000 and now you have it's worth 70,000, you owe capital gains taxes on all of that gain when you sell it. But if we donate it, we avoid capital gains taxes. And if we've held it for more than a year, we deduct the full value of the gift. Giving appreciated assets, right, whether it's stock or crypto or something else, is almost always better from a tax perspective for the donor than giving cash. And by the way, if they say, well, I think crypto is going to still go up, say, great, give us crypto instead of cash, and then take the cash you were going to give us and buy that crypto right back, right? It's not a wash sale because you're not, because it's a donation and it's not a loss. And so the nonprofit enjoys the full value of the crypto donation, usually liquidated immediately into cash. And the donor gets a lot of tax benefit, right? Donating crypto is yet another form of tax smart giving. It's more efficient for donors to give crypto, and it's better for you all because you're likely going to get larger gifts when donors avoid paying capital gains taxes. So it's a win for everybody. And like when we talk about stock giving, or even giving into donor advised funds and then giving to you, these tend to be the best available gifts for donors, way better than giving cash, right? My dream world is that in 10 years, most of you are taking many fewer cash donations and many more asset-based donations. And because of that, your organizations are 3 to 5 times larger. I mean, this is really, really important. What else is happening here, right? What are the big trends shaping crypto philanthropy right now that we need to know about so we can then take action and sort of change our strategy a bit? One is crypto philanthropy is back, right? According to Fidelity, as of 2021, donors contributed 158 million into donor advised funds. That was almost a 500% increase from 2020, right? So you saw when crypto goes up, this goes up. 2021 was the last year we saw a similar, what we call bull run, which means a big rise in crypto. And so it's likely we'll see a big change there in 2024 as well. Most Forbes top 100 charities accept crypto, and acceptance across the industry is at an all-time high, right? So more and more nonprofits are accepting it. What you don't want to do is be an organization that doesn't accept it. And then what happens is that crypto owner says, okay, great, well, I can't give it to, hypothetically, the Environmental Defense Fund, so I'm going to go walk over and get to the Sierra Club, right? So they will just sort of walk away and go find a different organization that does take it. Nearly half of all crypto investors donated $1,000 or more, and that makes them more generous than the general investor population, according to Fidelity. A third of all crypto owners said they've used crypto to donate to charity, and a common scenario is a younger donor who's acquired a large amount of currency quickly in a volatile market and wants to make an impact quickly. So it is the case that sometimes your first donation from a crypto owner might be $20,000, right? Which is not the norm for many other types of donations. Trend 2, we're continuing to see younger generations dominate the crypto and the crypto donation space. 26% of millennials own Bitcoin. According to a 2023 study, 3 in 5 millennial and Gen Z donors plan to give more to charity in the next 12 months, right? So you see a rising population in terms of wealth, in terms of crypto ownership, and in terms of giving, which is very good news. 90% of millennials say charitable giving is an important part of their lives compared to less of the general population, and more than 1 in 3 young investors currently own crypto, right? So we're seeing a big rise in crypto ownership here, and it's a meaningful chance to get donations from this group. Third trend, right? We're seeing an increasing acceptance of cryptocurrency into the mainstream. Well-known companies like AMC and AT&T accept crypto as a form of payment. More people are investing in crypto. We've already talked about 40% of Americans own it. 63% of Americans who own it hope to buy more. And the majority of people owning crypto view it as an investment. Most people are holding it like a stock as opposed to a way to transact, right? Really, really interesting. When crypto was up, we talked about this earlier, donations tend to be up. We anticipate that 2024 is going to be the best or second best year on record for crypto philanthropy compared to 2021. 2021 is currently the best year all time. 2024 will either surpass that or come close, right? That is our expectation at present moment. Donations surged from 4.2 million in 2020 to 70 million in 2021. This grew by 1,600%. And so that's a huge shift. The average donation in cryptocurrency rose by 236%, et cetera, to more than $10,000 in 2021. So we should see large, significant portions of crypto donations, and you really want to be ready. So let's talk about strategies for securing crypto gifts. The first one, not hard, make it easy. The best thing you can do to secure crypto gifts, if you only do one thing, make it clear that your organization accepts crypto so donors know to come to you. Nearly half of those who made crypto donations said it was difficult to find charities that would accept crypto donations. which means that if you are one of the ones who makes it easy and available, you will get an outsized percentage of crypto philanthropy. 44% said it was a cumbersome process to donate. Put this on your website, put it on your donate page, and make it easily accessible and easily found. So where are we putting it as an option? Donate page, your ways to give page if you have one, as a PS in fundraising emails. If you're using your own payment processor, include a form to capture donor info and provide a reason why you want this information. You can say something like your name, your address, your phone number are tremendously valuable for us to know who donors are. We never share, sell, or trade donor information. One example from our friends over at YWCA USA, who, as you know, does outstanding work. You can see here on their popular gifts for today, they have crypto as a big option between donor advised funds and stocks and securities. By the way, you should also be marketing DAFs and stocks and securities, as well as qualified charitable distributions, which are from donors who are over 70.5, right? There's a reason that YWCA is larger than most of the organizations on this call. And among other things, it's because they're very good at soliciting non-cash gifts, right? It's one of the best ways to grow. Here's what it looks like for them, right? You can donate crypto here, and on their page, there's a way to donate, to choose a coin, donate, and get a wallet address to send this to quite easily. So very simple. We'll talk more about how to put that into place in a moment for folks that are curious. Strategy 2, don't hold crypto, right? Crypto is a much more volatile asset than what you would normally invest in. And unless you are an enormous endowment with a broad array of risk strategies run by an investment advisor, don't hold it, right? It is by far the most volatile asset you will receive. So what most nonprofits do is they immediately sell crypto donations for cash. This is considered the least likely way to handle donations. It prevents discrepancies between the amount donated and the amount actually received. So you want a plan to auto-liquidate US dollars. Remember that crypto doesn't pause the way the stock market does, right, overnight. Instead, what happens is it's just running 24/7, 365, right, all the time. And so you want to plan that even if you're not manning the desks, where you have an auto-liquidate plan to US dollars. Strategy 3, know your tax rules. This is important, and I see some nonprofits messing it up. Please don't be one of these. The IRS treats crypto gifts like gifts of property and has a different set of rules. So if you are used to taking stocks and securities, we have to know that there's a special carve-out in the IRS rules for stocks and securities that are publicly traded. Crypto is not that, even though we know the price for crypto at any given moment. If a nonprofit sells donated property, and property includes cryptocurrency within 3 years, it must file Form 8282 with the IRS within 125 days of sale. This means when you sell your crypto, you have to file Form 8282 with the IRS within 125 days of sale. It must be signed by an officer of your organization, like your treasurer or your president. And the penalty for non-filing is only $50, but we do not want to be fined by the IRS. And we don't want to be the people who got our organization fined by the IRS. This is generally true for all donations valued over $500, right? So if you get a $20 crypto donation, you don't have to do this, but it's generally true for gifts of property over $500. If the gift is over $5,000, the nonprofit must also sign Form 8283 for the donor, which is how the donor then gets a tax break. You don't need to attest to the value. This is important. So you don't need to say, yes, we got crypto worth $80,000. Instead, what you would say is we got 1 Bitcoin. Many nonprofits are currently not complying with IRS regulations around taking crypto gifts. This is not a good look. And so you should solve that. We'll talk about how to solve that in a moment. Remember, you're helping donors find the best way to give. This framing should guide your messaging around crypto philanthropy. You are not promoting crypto or personally endorsing it. Instead, we're just connecting donors with potential assets and potential donors, who already have these assets. We're helping donors look across all assets they hold to determine the most effective way to support their charitable giving. And that's how we think about it, right? We have been doing crypto work for quite a while now. I think it's 3 years. And here's a couple of the things that we learned. Crypto donors are very excited about giving, and there are more crypto donors than ever. There is an overall reluctance within the nonprofit space to accept crypto as mainstream, or it's considered too volatile or too complicated. But generally, when we think about asset-based giving, there's volatility in stock giving and other things. And actually, a lot of giving is more complicated than accepting crypto, especially real estate giving. So we see crypto as another smart way to give and believe that nonprofits should be ready to accept these gifts when a donor is ready to give them. So we ask you, which of these gifts do your organizations actively solicit? Well, basically, everyone says, give me the cash, right? Show me the money. About 90% say monthly gifts. 86% say recurring gifts. Obviously, a lot of those will be monthly. 83% say donor advised fund. That number needs to go up. Stock gifts, 80%. If you're not accepting stock gifts, we need to talk. You need to push that up. These are going to be the biggest gifts you get. Again, 3/4 say QCDs. Most of you are not marketing QCDs enough. And those of you that aren't doing any of this need to start taking it. That is becoming the most popular gift for donors over 70, right? Qualified charitable distributions. Those are gifts out of an IRA for somebody over 70. 36% say real estate. Now, look, real estate gifts can be really big. We understand why many smaller nonprofits don't take them. They're a little cumbersome, but getting someone's vacation house that's worth $500,000 could be really useful, but it comes with some restrictions and challenges. So that's okay, right? If you're a large organization, you're not taking real estate, maybe start thinking about how to do that. And then only 16% here said cryptocurrency, right? In terms of actively solicit. And that number should probably go up. Remember, 40% of Americans own it. So even knowing that you accept it signals to younger donors that they have a home for you as a place where they can give money. We're going to pause there, but this is a really good avenue, right? So we have a lot of questions. We wanted to allow some extra time for questions on crypto, as you all are still sort of sussing this out. But there's some really interesting avenues here as we chat about it. So a couple of resources. My colleague Phoebe is going to drop a survey in the chat. Thank you, Phoebe, for doing that right now. And the first thing we're going to do is give away The Psychology of Money to 20 folks. So please click on that now. Biggest thing is please don't forget to include your address so that if you win the book, we can actually send it to you. Occasionally, we'll get people who add their name and not their address. And obviously, it's a lot harder. We have to just go to somebody else and give them that book. And then the other couple of resources, we've just created this spring strategy memo for folks that is designed to be used internally, right, with your board and your leadership. And the real thing we're looking at here is you always want to sort of understand what's happening in the world. And what we're seeing is the S&P 500, the Dow Jones, and NASDAQ are all roughly at or above record highs. And that's been true for the last month and a half. We're about 10% year-to-date growth already, and it's only March 26th. And it's been a very, very good 5 years in this. So now is the best time to go after tax-smart gifts, which are mostly focused on appreciated assets, whether that's in your IRA, whether that's stocks, securities, mutual funds, crypto, donor advised funds. So please fill out your survey, and we will give that as well. And then tomorrow, for folks that are interested, at noon Eastern, so in a little under 24 hours, we are going to meet again, same place, same time. And we can send you an invite for this if you're interested, to do about a half hour on one of FreeWill's tools around smart giving. So what might help you solicit stock gifts, QCDs, crypto, et cetera. One of the things that's really interesting that we're adding to a lot of our tools is an increased use around artificial intelligence. Now, why is this useful? Well, it's because if you're trying to figure out how to solicit crypto or donor advised funds or IRA gifts, but you yourself don't always feel super comfortable talking about them, this will help you with both talking points or even drafting fundraising emails that include these concepts. So it's a really good way to level up your whole organization very, very quickly. So great. We are going to pause here for questions. And the other thing I will say is in 2 weeks, so not next week, but 2 Tuesdays from now, we're going to dive in on some new research. So the FreeWill team has been really hard at work, including with a partner, to look at all of the latest trends around donor advised funds. And so we'll reveal that. We're still crunching some of the numbers and talk about some very specific strategies on how to secure more donor advised fund gifts in 2024. Also, by the way, if you have any questions, you can always email me at patrick@freewill.com, or I'm very easy to find on LinkedIn. I'm the only Patrick Schmitt at FreeWill. So feel free to hit me up there as well. But we'll spend about 5 minutes on questions, then we'll let everyone go a bit early today so we can everyone get some time back. Okay, pardon me. Catherine says, are there seasons when people buy crypto? Now let's go all the way back to some of the early graphs here, because I want to show you this. There are seasons when people buy crypto. They are not predictable, right? In the same way the stock market is not predictable, we cannot be in a place where we want to say, oh, we're going to predict the future of crypto giving. If you could do that, you would have a different job, right? Nobody is here predicting the future, and this is not financial advice. But you can see here when we look back over time, right? When the price goes up, it means more people are buying than trying to sell. When the price goes down, more people are trying to sell than trying to buy, right? That's how supply and demand works. So you can see there are different periods in recent history where you have what we call bull runs. A lot of people are trying to buy, not a lot of people are trying to sell, the price goes up. What happens there? That is the time when soliciting crypto, because there's so much appreciation in it, is the most valuable. So if you are a major gift fundraiser, maybe once a week, just go check the price of Ethereum and Bitcoin. Is it going up? Is it going down? Where are we in the market? Even once a month, right? Just to get a general sense of where you're going to be. But there's no sort of like every January people buy or every September people sell. Great question. Stock donors typically donate shares of an individual, Mark says, stock donors typically donate shares of an individual stock. How do they donate part of a Bitcoin? So at this point, Bitcoins can be fractionalized down to decimals. And so it's easy to give half a Bitcoin or 0.023 of a Bitcoin in the same way I can give 25 cents or half a dollar or whatever. So it's in markets, it's basically identical to fractions of stocks. You can always donate portions of a Bitcoin, especially because Bitcoin is so much money. Gary had the same question. Yes, you can donate a portion of it. Suzanne says, how do we accept crypto? How do we start? There are some different tools. If you want to come check out the Smart Giving Suite tomorrow, that's how FreeWill helps organizations accept crypto. One of the best parts about that is that we automatically liquidate it and we do all the tax filings for you. So all of the hard work comes off your plate. It's a pretty cool tool. So come check out tomorrow. Matt says, why don't they, meaning YWCA, YWCA USA, which we'll come to in a second, why don't they just put the wallet address on their page? Why not do that instead of having that form? So let's see if we can show this here. So why do this, right? Why have this? Well, look, if you're the YWCA and you only give out your wallet address, the wallet address is sort of like an account number, right? It's a way I could route crypto to you. Then you can't capture the name of the donor or the email address or the mailing address to send those receipts. And so suddenly the donor is out of a tax receipt which should give them huge tax savings. Now, what else is a problem? Well, because, right, if you don't capture information up front, someone can see on the blockchain, oh, the YWCA just got, $100,000 in ETH. You could write to the YWCA and say, hey, give me a receipt, even though you weren't the one that donated it. So you want to have these two things tied up together. Great question. Matt, did any orgs hold Bitcoin or ETH? I think $1,000 Bitcoin gift in 2016 will be worth $170,000 today. Matt, that is correct, right? But what you're suggesting is mostly crypto speculation, right? Not if everyone knew that $1,000 would turn to $170,000, everybody would have bought it back then. And it's just not how markets or predictability work, right? So you might, in the same way that you might think Tesla stock is going up or Apple stock is going up, but you as a nonprofit don't want to be an individual stock picking world. And functionally, it's identical to saying we have $1,000, let's buy Bitcoin, as opposed to taking your Bitcoin and not selling it, right? It's all the same. And so we just suggest that nonprofits be more risk-averse investors than that. This, by the way, is not financial advice. We're not qualified to give investment advice. Some good questions here. Annie said, do you find that nonprofits use the same vendor through whom they accept stock to accept crypto? Do we need a separate vendor? Do you have a vendor you recommend? Annie, there are a lot out there, but FreeWill does this as well. And so feel free to come to tomorrow's session or just make a note in the survey. We find that the more these things are tied together, the better off you are, right? Because if you have an email, if you're doing marketing, it's not great to just market crypto gifts because 40% of Americans own crypto, 60% don't, right? Your donors, which may be a bit older, well, a lot of them have IRAs and not crypto. A lot of them have IRAs and but really want to give stock. Some of them have donor advised funds. And we recommend a much smarter approach is sort of sharing with your donors all of the smart giving options and letting them pick the one that works for them instead of trying to guess who has crypto and who doesn't, or who has a donor advised fund and who doesn't. And so we really recommend this together approach as opposed to doing one-offs about each different types of smart giving. Great questions. Suzanne says, so if someone wanted to start investing in Bitcoin, they don't have to cough up $73,000 for a full unit. They could just purchase a portion of one. Is that right? Yes. So a lot of people use something like Coinbase, which is an exchange and an app. And you can say, you know, I want to donate $2,000. I want to invest $2,000 in Bitcoin. And the same way that you could go and invest $2,000 in Apple stock or Google stock or in Meta stock, and you get a fraction or you get multiple of the stocks, depending on what it is. So great questions. Britt says, making a permanent giving guide is one of my tasks this week. So go check that out as well. Melissa says you can also buy crypto through Venmo now, Gemini, etc. So lots of options for people to buy crypto if you're curious from a consumer standpoint or an investor standpoint. All right, well, let's pause there. A lot of great questions today. Just coming back to our final steps. If you haven't already, Saran says, how do we sign up for tomorrow? Saran, there is a survey in the chat. Click that, and that will give you a chance to RSVP for tomorrow's session. If you'd like to join us, thank you, Phoebe, just put it back in. We will also see you in 2 weeks for Donor Advised Fund Deep Dive, which should be really interesting. And just one more time, happy spring.